with Gibbs Wealth Management, Aaron Gibbs. And Aaron, what changes did you make in your portfolio? You saw this number come out. It was unmitigated disaster, no matter how you tried to chop it up. Did you make any changes based on that?
No, though I am one of the people on Wall Street that was very surprised. I see this as more of an issue around the Delta variant that could be slowing, and I've already switched to being more of a core investor. So I didn't see this as an immediate trigger point where Wall Street should completely shift your style or your operations. I was already sort of in the middle lane anyway to begin with.
Right. David, I know you're always fully vested, but you do make changes within that. The Delta variant, it's a dark cloud. It's not necessarily going away. It has certain impacts. So are you making any adjustments because of it?
I didn't do anything on Friday, but I have a better sense as to what to do today. You know, Friday's tape said a lot. You know, growth held up, industrials were weak. That made sense given the weak number. What didn't make sense was the sell-off in bonds. So that should have been good news for bonds, and yet they sold off, and they're selling off again today. I think we're in the early stages of the Federal Reserve losing control of the long end of the curve. I think bond investors always thought Jay had their back. Now inflation is ramping up pretty heavily, and you have a Washington fiscal policy about to be launched that is literally toxic. And I think bond investors are pulling back. Not a lot of time in this right now, so I don't have a robust data set, but I think that points me towards financials back in. I'm going to have to adjust and go back overweight.
Okay, and to that point, I think it's interesting because for almost all year, you know, Wall Street's been consumed with this notion of growth, value, rotation, and many have said, okay, just go with a barbell approach. And it's always been value and growth. But, you know, Aaron, I'm looking at this market the last few weeks, and it seems like your better combination would be a barbell of defense and growth. I mean, is that something you're looking at?
Absolutely. I think, you know, including some more defensive stocks is healthy, particularly at this point. I think that we are seeing signs that we might not have this super robust recovery that happens very quickly. It might be a little more protracted. We might hit a few more bumps, and this transitional inflation might it's going to be a long transition. Let's see, it looks like that's going to be the case. So having both sides of it, but again, I would still advise investors to be always very cautious about some type of valuation, that even if you're getting in growth, try to get in at the better prices, because some of these stocks we've seen for 18 months don't outperform the market, and they do trade sideways. And so you need to be selective about what stock is really going to outperform the market. Otherwise, just buy the S&P 500.
You know, one stock that's outperforming the market the last couple of weeks is Netflix. It's a classic momentum name. When it gets going, and this morning it also fetched an upgrade. Would you have something like that, David, in the mix of the names that you have? I mean, because you've got to have these outliers that outperform. Would that be something you would chase?
Look, the death of Netflix at the expense of rivals like Disney and others has been greatly exaggerated, and I am guilty as charged. Look, despite the challenge, you know, in the streaming space and some of the challenge from some of the largest media houses out there with deeper pockets, Netflix has managed to hold up. Those other companies are looking to underprice Netflix, and Netflix has raised prices and is doing just fine. So this is a trade that I've missed. I'm going to have to go back to the drawing boards and rethink it, but this game isn't over. Netflix is still a major player and will continue to be so.
Two of the mega cap names doing very, very well. Amazon, they're going to start making TVs. They'll put Alexa in that. Apple, a lot of hype building over this new iPhone. Mega cap names, Aaron, are you long? How much of a position do you have in these kind of names?
So I do like very selective, again, some of the mega caps. Amazon, I noticed back in July, because it finally broke out of its trading range. It was actually underperforming for quite some time, and it was even during the period when growth was doing well. But I think now Amazon looks a lot more reasonably priced. I think there's a few good headlines around it, and even if value or defensives do well, I think Amazon is going to be one of these companies that takes advantage of economic recovery and growth. So particularly after the July breakout, it's been a company that I advise, and I think this pullback is a great place to get in.
All right.